Welcome back to Dinar Community Channel. In the world of foreign currency speculation, few debates are as intense, polarizing, and persistent as the one between Iraqi Dinar IQD and Vietnamese Dong VND holders. Both currencies represent nations with complex pasts, resource-rich economies, and undervalued exchange rates, making them hot targets for investors looking to catch the wave of a potential revaluation. But with both countries making major moves on the global economic stage, the key question remains, which one will revalue higher first? For years, IQD and VND have shared the spotlight in the global currency revaluation (GCR) conversation. But the specifics of each case are vastly different, and the answer to which will revalue first depends on multiple variables: geopolitical realities, central banking policies, foreign trade agreements, and international financial backing. Let's begin with Iraq. The Iraqi dinar was once a proud and powerful currency. Before the Gulf War, its exchange rate hovered above $3 USD to 1 Iraqi dinar. However, after decades of conflict, sanctions, and internal corruption, Iraq's economy deteriorated, and the dinar plummeted to an artificially suppressed value. Today, it trades at roughly 1,300 Iraqi dinars to 1 United States dollar, a stark contrast to its historical high. But despite its current low standing, there are compelling reasons why many analysts and speculators believe the dinar is poised to revalue, and perhaps sooner than the Vietnamese Dong. First and foremost, Iraq is an oil powerhouse. Ranked among the top 5 nations in proven oil reserves, Iraq holds leverage in the global energy market. Its crude exports generate billions in annual revenue, and oil is priced globally in US dollars. That means Iraq's central bank has access to a continuous stream of hard currency, which is critical for backing a national currency on the world stage. Furthermore, Iraq has been undergoing rapid economic and monetary reform. In 2023 and 2024, the Iraqi government implemented anti-corruption crackdowns, digitized its banking infrastructure, and joined regional financial systems that promote transparency and international interoperability. By 2025, Prime Minister Mohammed Shia al-Sudani had made clear statements that Iraq was ready to regain its monetary sovereignty. In June 2025, al-Sudani confirmed in an official address that the Iraqi dinar would be recognized for global trade settlement. That announcement alone caused a stir across the financial world, and for dinar holders, it marked the moment long awaited. This progress wasn't made in isolation. Iraq worked closely with global organizations like the International Monetary Fund (IMF), World Bank, and the Bank for International Settlements to modernize its fiscal policies. Iraq has also begun the process of de-dollarization, encouraging the use of the dinar in oil contracts and trade deals with neighboring countries. This shift from petrodollars to petrodinar is a massive strategic step toward making the IQD a legitimate global currency again. In addition, the Central Bank of Iraq has strengthened its foreign reserves, diversified its holdings into gold, euros, and Chinese yuan, and even launched pilot projects involving asset-backed digital dinar instruments. These actions indicate strong planning for not just a revaluation, but a re-emergence. But what about the Vietnamese Dong? Vietnam is a very different case. Unlike Iraq, Vietnam did not suffer a currency collapse due to war or sanctions. Its dong has been low in value for decades due to government policy rather than geopolitical trauma. The current exchange rate sits around 23,000–25,000 Vietnamese dongs to 1 United States dollar. That's a fraction of a cent per dong, causing many to speculate that the currency is highly undervalued and overdue for a revaluation. Vietnam's low exchange rate is largely a strategic economic tool. By keeping its currency weak, Vietnam remains an attractive manufacturing hub for global corporations seeking low labor costs. This export-driven model has transformed Vietnam into one of Southeast Asia's fastest-growing economies. The country boasts robust GDP growth, a rising middle class, and steady foreign direct investment (FDI) from countries like Japan, South Korea, and the United States. In 2024 and early 2025, Vietnam saw major economic reforms as well. The government implemented tax modernization, anti-inflation controls, and digital payment infrastructure to support a shift toward a cashless society. The Vietnamese central bank has also been quietly accumulating foreign reserves and increasing its gold holdings. In May 2025, leaked reports suggested that Vietnam was considering a partial realignment of its currency to better reflect the nation's productivity and rising exports. Unlike Iraq, Vietnam is not as dependent on commodities. It is far more diversified. Its economy includes electronics, textiles, agriculture, and tourism. That economic stability may make a sudden, massive revaluation less likely, but it also makes gradual appreciation more sustainable. So which one will revalue higher first? The answer is complicated. From a pure technical standpoint, Iraq's dinar has a stronger case for a rapid and significant revaluation in a shorter window of time. The IQD is artificially suppressed due to historical factors and sanctions that are no longer applicable. The moment Iraq reopens fully to the global financial system and allows open market convertibility, the dinar could see a sharp upward correction, potentially returning to values in the $1 to $3 range. Vietnam, by contrast, is less likely to shock the market with a sudden revaluation. Instead, it's more likely to allow a slow crawl upward, as it balances export competitiveness with rising domestic consumption. The government is cautious and tends to prioritize stability over dramatic change. So while the dong could revalue in the future, it would likely do so incrementally, perhaps to 10,000, 1 or 5,000, 1 over a period of years. Another key factor is banking infrastructure. In Iraq, leaked documents and insider reports have indicated that Tier 1 banks like JP Morgan Chase, Wells Fargo, and Citibank are actively preparing IQD exchange centers in multiple U.S. cities. Some of these facilities are rumored to be private, appointment-only centers capable of handling structured redemptions and contract rate exchanges. The presence of these exchange pathways, combined with verified digital integration with SWIFT and global platforms, positions Iraq closer to revaluation readiness than Vietnam. On the other hand, while Vietnam is widely traded on Forex platforms, there is little evidence of Tier 1 banks preparing for a VND redemption event on the scale seen with IQD. In fact, many Forex desks continue to treat the dong as a stable but low-value currency with minimal volatility. That signals less immediate movement in terms of major revaluation. Public policy also matters. Iraq's leadership is vocally committed to currency reform. Prime Minister al-Sudani has made multiple references to the dinar becoming a regional and global trade currency. By contrast, Vietnamese officials have not publicly entertained the idea of a major currency reset. Their communications focus more on slow, controlled appreciation tied to macroeconomic data. Additionally, geopolitical alliances are playing a role. Iraq's increasing partnership with BRICS nations, particularly China and Russia, has accelerated its move away from dollar dependency. Iraq is actively pursuing oil for currency deals in yuan, rubles, and dinar. That puts it squarely in the camp of nations pushing for a multipolar financial system. Vietnam, while politically independent, remains closely aligned with Western markets and cautious in its financial experimentation. One wildcard is the global currency reset (GCR) theory, a belief that multiple undervalued currencies, including the IQD and VND, will revalue simultaneously as part of a worldwide monetary realignment. Proponents of this theory argue that both currencies will benefit from coordinated reforms driven by the IMF, World Bank, and other institutions. If that occurs, the question of which first may become irrelevant. They could revalue on the same day. However, no official confirmation of a GCR timeline exists. So let's summarize. Iraq's dinar has strong fundamentals for a higher and faster revaluation. It is underpinned by oil, backed by reforms, and now positioned for global trade. With strong signals from its leadership, verified bank preparation, and financial system readiness, Iraq appears closer to the finish line. Vietnam's dong, meanwhile, has long-term growth potential and stability. It's tied to one of the most dynamic economies in Asia, but its revaluation, if and when it occurs, is likely to be slower, smaller in scale, and managed carefully to protect exports. For investors looking for immediate upside and a historic correction in value, the IQD appears to be the frontrunner. For those seeking long-term stability, gradual growth, and steady policy, the VND offers an attractive secondary play. Of course, no investment is guaranteed. Currency revaluations are rare, highly political, and influenced by forces beyond economic logic. That's why diversification, legal protection, and careful strategy are key for anyone holding either currency. Whether the IQD or VND revalues first, smart investors will have prepared for both. Ultimately, the real question may not be which revalues first, but who will be ready when they do. Because when either currency makes its move, Hesitation could be costly, and preparation will separate those who simply speculate from those who truly prosper.